Donald Trump just announced 30% tariffs on the European Union starting with the 1st of August. In response, EU officials said trade between Europe and America could basically be over. Now, obviously, that's a huge problem for businesses and consumers, but what does it mean for European investors? Based on my 18 years of investing experience, working both in America and Europe, let me show you the risks that I see. Okay, so this whole crisis started in early April when Trump announced huge tariffs on pretty much everyone around the world. The baseline tariff would be 10%, the European Union would have 20%, and some other countries would get hit with as much as 50%. So whenever America imported goods from these countries, local American buyers would have to pay 10 or 20 or even 50% more for these goods. Now, in addition to making everything a lot more expensive for people in America, this was clearly bad for economies all around the world. So when Trump first announced this, global stock markets fell dramatically by as much as 12%. Then, over the following weeks and months, Trump delayed the worst of the tariffs, and he made some early agreements with countries like the UK and Vietnam. Seeing this apparent progress, the markets recovered. In fact, they went up and up and up until everybody started talking about the taco trade. Taco stands for Trump always chickens out. It's an investing philosophy which assumes that whenever Donald Trump makes dangerous threats, he's actually going to back down after he sees that they have a bad effect on the economy and on the stock market. Driven by this taco trade, American stocks have actually reached all-time highs. But there are two problems with the taco trade. And the first problem is that it's not quite true. Yes, Trump has postponed some of the worst tariffs. His administration has made a few deals with a few countries. But overall, America has already increased its tariffs significantly. They are already at the highest level since 1910. That's 115 years ago. And further big increases have only been postponed. They haven't been canceled. Now, the second problem is a little more subtle. The taco trade assumes that Trump will get scared of a falling stock market and cancel his dangerous decisions. But if everyone believes in the taco trade, well, the stock market's not even going to fall when Trump announces these decisions. But then, if Trump sees the market going strong, he might well assume that everybody loves his tariffs and not cancel them at all. So, ironically, the taco trade might be its own worst enemy. All of this means that when Trump says 30% tariffs on Europe are coming, well, no, it's not a sure thing. There's certainly plenty of room for this to get canceled, but it's very possible that this will actually happen. So now let's see why these 30% tariffs could make trade between Europe and America basically impossible, as suggested by EU Trade Commissioner Maroš Šefčovič. Just how bad is this, and what does it mean for investors in Europe? Well, this all comes down to the reason why countries trade in the first place. Think of it like this. Let's say I'm a shoemaker. Okay, I know how to make really high quality shoes at a good price. Now, I also have the skill to make jeans, but that's not my main thing. So when I make jeans, they're not quite as good and not quite as cheap. Now, my neighbor specializes in making jeans. He knows how to make top-notch jeans at a low price. He also has the skill to make some shoes, but he's not used to it. His skills are not so good. He doesn't have the right materials and tools. So when he does it, the shoes are not going to be quite as good as mine, and they're going to be more expensive. In a normal world, it's obvious that I should just stick to making shoes, and I should buy jeans from my neighbor. And my neighbor should make jeans and buy shoes from me. In the end, we both benefit. We are better off than if each of us tries to do everything. But if my neighbor lives across the border in a different country and there's a 30% tariff, that means that when I buy jeans from my neighbor, I have to pay 30% extra in tariffs. And I might just conclude it's easier and cheaper for me to make my own jeans in that case. And likewise, my neighbor might discover it's cheaper for him to make his own shoes as opposed to buying them from me. In the end, we are both worse off because we get lower quality goods at a higher price. So that's what tariffs between America and Europe mean. It's not going to be the end of the world. We're not going to see starvation or riots in the streets. Both America and Europe are big enough. We have enough resources to produce the goods that we need internally. It's just that this is going to be more expensive without trade, and the quality will suffer. With tariffs as high as 30%, a European supplier would basically have to cut their prices by up to 30% relative to local suppliers in America just to be competitive. And that's not going to be practical in most industries. So this is why most trade between America and Europe could be very heavily affected. Now, when these tariffs go into effect, in the beginning, there could be very high inflation. It's going to take time for supply chains to adjust, for local manufacturers to increase production and compensate for these lost imports. As time passes, these price increases should slow down, but the economic effect will still be quite negative. For example, right now, according to Yale University's Budget Lab, the 2025 tariffs disproportionately affect shoe and clothing prices in America. Initially, prices are expected to be around 40% higher than without the tariffs. But even after local manufacturers step up and supply chains readjust, prices are still expected to be 20% higher going forward. With other products, the effects might be smaller, but the US economy is expected to grow 0.5% per year slower because of the tariffs, and unemployment might be 0.5% higher. And of course, Europe is likely to suffer in similar ways. We are likely to see higher prices on American goods, and in many industries, there are likely to be significant job losses. So, what does this mean for us as investors? Well, that really depends on your time horizon. If you are a short to intermediate term investor, you need to be very aware that the stock market is a risky place to be. With the taco trade, things might look like they're going fantastically well on the surface, but if this trade fails, there could be a sudden and sharp drop in the market. When you have high inflation, or when industries have to lay off a lot of people because there's no foreign demand, the market can react very strongly. Sometimes it even overreacts. So it wouldn't be surprising to see European stock indexes or American stock indexes fall significantly sometime within the next few years. But then again, if you're a short-term investor, you shouldn't be 100% invested in stocks because it's normal for the stock market to experience these kinds of disruptions. A lot of your portfolio should be in much safer investments like high-quality short or intermediate-term bonds, or simply a high-yield savings account. Now, for long-term investors like me, this is just another reminder to make sure that you are diversified globally, to make sure that you have a good safety cushion, that you have taken care of investing basics. If high tariffs stay in place for many years, this will clearly be a significant drag on economic results. And that would in turn affect investment returns. Okay, we might see lower profits than otherwise. But in the big picture, I'm not that worried. I wouldn't expect this to make the stock market unprofitable long term or anything like that. Over the past century, the stock market has proved remarkably resilient despite many different kinds of problems, recessions, wars, and more. Investors who stay calm and keep investing in a diversified way are likely to do just fine. The biggest challenge in times like these is simply not freaking out, not making dangerous mistakes because of your emotions. And it's likely that we are going to have an emotional next few years. Now, helping investors here in Europe stay calm is actually one of my goals with my investment newsletter. Every week, I send out the latest investment news, investing tips, and money insights to over 70,000 readers all over Europe. To join my free newsletter, just follow the first link in the description.